It's always a pleasure to get a chance to talk to Paul Beattie, BT Global, co-founder there, co-manager there, especially in this kind of a time. Paul, first of all, thank you for taking the time, but I got to figure you're in a cheerful mood. You were with us at the World Outlook Conference, and I think you guys are up around 40% since that time, which is obviously spectacular, but it makes for easy days, easy nights.
Certainly puts a smile on our face, our faces here. Good to see you, Michael.
I want to talk about a couple things here. We can never do it justice, but let's talk about the overall investment environment. And I want to talk about both the U.S. and Canada, probably separately.
Sure. You remember from the conference, we one of our slides I think we advocated this maybe 18 months ago, but certainly in February, we came out and sort of said, look, the Canadian market has underperformed for 10 years now. The U.S. markets, well, we think it's breaking out. It's bottomed, and we made the prediction that Canada would start to outperform the U.S. and particularly small cap, right? So the TSX Venture, for what that is, a collection of thousands of companies, really, and we called it in February. Well, what is the number one performing index in the world now? Is the TSX Venture.
Wow.
It's happening, and I think what's exciting is that it's been in a long period of underperformance, and I think you can expect this trend to continue. I'm thinking 3, 5, 7 years. And why is that? Well, probably because there's a lot more value in the Canadian market than in the U.S. Anyway, number one in the world now. So,
give me a couple of names from that, just so we get an idea of what we're talking about in company size.
Well, I mean, look, we've got we're heavily weighted towards, of course, metals, mining, energy, smaller tech, fintech. All sorts of orphan companies. Like in Canada, we don't have a venture capital market, really. The venture capital market is the public market.
Yes.
And so all sorts of, we call them orphan stocks or unique stocks, and with interesting business plans. And the thing I don't think people understand is the Canadian market is filled with companies focused on the U.S. and internationally. Like, there are hundreds of companies that don't generate $1 in revenue in Canada, right? But they're listed here. So the venture is filled with stocks like this. I mean, we could go on for literally hundreds of companies.
But your point is also interesting here, because you'd have people saying, well, it's on the Canadian Venture Exchange or even the TSX, but they'd say, yeah, but I'm not convinced yet in Canada. I'm still, I'm watching weakening numbers and, economic numbers. And I'm Mr. Depressing, by the way. If you're having a good day, just phone me. I can talk you down because I look at all the economic numbers and we have not turned a corner. But what you're saying is, no, there's plenty of companies that are in, Canadian base that we're buying in Canada, but their fortunes are far closer linked to the U.S., for example, and what their economy is doing.
Or internationally. I mean, we're invested in an IT company. It's based in Egypt. It's a play on the Middle East. It just happens to be listed here. We're in Colombian energy companies. They don't make $1 in the Canadian market, not $1. I mean, it goes on tech. When you're talking about a tech company in Canada, what are the odds of them being focused on the Canadian markets? It's basically zero. They're much more likely to be U.S. centric. So, and by the way, I meet with sophisticated allocators of capital. When I tell them that we invest in small cap Canada, or we just mention the venture exchange, they look at us with like disdain. And it's pretty much not much different when you talk about resources. As soon as you tell some pension fund manager that's allocating tens of billions of dollars that you're focused on commodities, they show no interest whatsoever. And I just think that we're not at the late stages of this turnaround at all, because the big boys are just not here, right?
And that's exactly what that, before you said that, that's the message is, oh, we're early,
We're
because before we're done, they will be in these markets. You can't ignore commodities. And yes, you can get individual. Obviously, gold's just given us a ringing endorsement. Really, you want to ignore gold? You want to ignore the movement in silver? You want to ignore the movement in uranium? Well, you've got to catch up at some point. And there's, of course, you're saying there's a wide variety of critical minerals. That's a desperate area. If you're in U.S. defense, for example, you've just given all the power to China because that's where you got to get them from. Well, they can't have that. So it's got to be developed, elsewhere. And I'm just saying it's kind of interesting. That tells me it's early days, actually, because they are going to be involved before it's done.
and the great thing about being a value investor is when you find true value, you find companies that are trading at 10, 15, 20% of what you think would be an intrinsic valuation. When the stocks do well, let's say they double, it's still good value. If
Yes.
you're buying a company at 2 times cash flow and it doubles, doesn't mean you got to go find something else. I mean, heck, it could double again and then again after that. And so I just think the Canadian market is just too inexpensive, especially in the smaller cap. And it's interesting times. I think a lot of wealth is going to be created in the Canadian capital markets, despite what the larger players are doing.
Well, the other thing I'm hearing in that is exactly why you get professional fund management, because while I understand the valuations, I don't look in Egypt for them. Do you know what I mean? I'm not sitting here and having the time to do the full scope of the world. And that's why you hire people like yourself and your team to do exactly that. To see, because I think people intuitively understand there's a variety of opportunities there. And if you can find one, as you say, it's listed in the Canadian market doing its operations elsewhere, that's something that it's nice to have professional help doing it.
Sure. I mean, let's just go back to February at the conference. I mean, we recommended a bunch of stocks, not in just one sector, but across a variety. I'll go through a couple with it. Remember Kits? We talked about Kits, the Vancouver-based eyewear company. The stock was at 850. Now it's 1650, basically up 90% since February. We still own it. We haven't done a thing. We love this company, and we think it goes higher because it was good value.
You also recommended it well before last year on our show, when it was much lower valuations than that. And I mean, I think it's up, this is off the top of my head here, up about 300% since you first recommended on a Money Talks and at the Outlook conference 2 years ago and 3 years ago.
Yeah. By the way, we might just recommend it this February. We'll see. But it's still good value. How about Aris Mining, right? The gold, we've all talked about the gold companies doing well. Our favorite is Aris. We haven't sold down our position. The stock's up, went from $5 to $14, up 168%. We still think it's ridiculously undervalued. Radisson Mining, they were there at your conference. They had a booth there. 35 cents. Now it's 64, up 83%. We still like that company. It's tremendous value. We've talked about silver. Your guests talk about silver. We're still bullish on silver. We even recommended a good thing to do might be buy long-term options on silver, right? Instead of putting up, back then it was $30. Instead of putting up $30 to buy silver, why don't you put up, I don't know, $4 or $5 and buy long-term calls on it? Maybe it's sounds a little risky and stuff, but it's actually it would have been a great call because it's gone from 30 to what the SLV is now at $43, so up 47%. I can tell you all those options went up dramatically. Then we went into the space industry, right? Here's you pick another whole sector in Canada. Nobody talks about it, but we've got two great space focused companies, right? That MDA space and Telsat. Well, MDA's gone from 22 to 34, up 58%. Telsat, what a beautiful stock chart this thing has. It went from 27 to 38, up 40%. We have not sold down either of these two positions. We like them both at these higher levels, and I mean, it's, as I said, there's a lot of value in Canada across, lots of different industries.
Well, one of the challenges for individual investors, let's say they're not in those stocks that you've described, is to get in them at that time. And another challenge, if you do, you just can't stand the prosperity, so you get out. And so what metrics are you, I mean, you guys are, to me, really one of the original cash flow, you know, macroeconomic and, fund managing teams. You look at the cash flow and that's your first step. Is
Yeah,
that because these now you're saying you haven't sold out of these after, very substantial gains? Are you saying that's because the cash flow still valuations still hold up?
exactly, exactly. I mean, we're finance guys. It's tough to be an expert across too many industries, right? You can basically
Mhm.
focus on one. But anyway, we're financial people. We can do math, and when we get the benefit of meeting with, like 200 plus companies come into our office every year, right? The institutional brokers bring them in, and they come through Montreal. We meet with them, and some people sit down in our boardroom and tell us they're trading at 2 times EBITDA,
Yeah.
and we're like, what? How's that? And then, of course, we do the due diligence and verify all of this, and I can tell you it's still happening.
Yeah.
We have a tech company coming in next week, apparently trading at 2 times EBITDA. We'll see. We had Sante Gold, just to pick a company out of a gold name out of Ghana in West Africa. We didn't know much about it, but here's the math. It's very simple. They produce next year. Now they produce 350,000 ounces, but next year they're supposed to produce 450,000 ounces of gold. And their margin now at these gold prices is $2,000 US per ounce. So you multiply 450,000 times $2,000, you get to 900 million US. And you put that in Canadian dollars, you get to $1.2 billion. And the market cap is $1.6 billion.
Hmm.
So, I mean, it's not like we're making this stuff up. These things exist, and we verify them, and then we buy. If you can buy companies at under 3 times EBITDA, I think you should do that all day long. Um, it'll work over time.
The other side, though, that I want to make sure people understand with BT Global is that you guys can short stocks too, if you choose to, if you think something's overvalued. And you got to forgive me, Paul. I keep coming back to you. You made me laugh so hard when you guys shorted Peloton when it was, heyday. I think this is off the top of my head, 2022, the pandemic heyday. And I think your comment was it was overvalued, even if each one of us owned it a Peloton in our 4-bedroom homes, in each bathroom and the living room. He's, and then of course, you had a huge success. But I just want to bring people's attention to the fact that I just think it gives funds more flexibility when they can go both directions.
I I wouldn't manage money any other way, but
Hmm.
it's a full time job, right? I mean, you can't short too many stocks in your personal portfolio. I wouldn't recommend that. But with a balanced
Hmm.
portfolio like we have, and I just because the other thing that happens, somebody walks into your office, sits down in your boardroom, and tells you that he's got $1 billion market cap and revenue of $20 million, and you just go, "That's fantastic, congratulations!" But that it doesn't look like a buy to me,
Hmm.
because what's the fundamental value? It's tough to call, right? And
Yeah.
so yeah, we 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 have the benefit of seeing overvalued stuff as well, and don't think it doesn't happen. It happens all the time. Stocks get to valuations that are just absurd. You don't have to be a genius to figure out that there's no financial metric, and so
Hmm.
maybe
That
that's not
justifies it. Yeah.
yeah. So
Okay, before we go, let you go. And the other thing is, first of all, I really appreciate you coming to the World Outlook Conference. You've been spectacularly popular there, but appreciate looking forward to hearing from you again, this coming February, making the big trek across the country to the sunny West Coast. But at the same time, just give us one or two things that are on your radar now that maybe we're not familiar with. again, they can, you do it within the fund, and that's important because of the level of diversification, the balance of it, et cetera. But just so I'm not asking, for a specific stock recommendation because you don't know my portfolio, but something I should be looking at.
Well, I mean, I listen to your show, of course, every week. Very much enjoyed. I think the guests you have on are bang on in the sense that we need to worry about the debasement of our currencies.
Yeah.
I think you need to be in hard assets. This development in gold, what doesn't get a lot of press, I think, people like Wall Street covers, ETF flow, North American inflows into ETFs related to gold and silver and stuff. I think that's all interesting, but it's missing the point. The point is the central banks are buying, and so what's just happened in the last month? China has recommended that their insurance industry, right, all their insurance companies should have a 1% position in gold. Okay, that came in a month ago. Well, what does that mean? Well, if they had recommended a 2% position, you do the math, that would have been all the world's gold production in a given year, right? So
wow.
They came up with 1% largely because they couldn't come up with another higher number, or it would have been too dramatic. So there's some significance. Last week, the bank offered to host other governments to host their gold reserves on Chinese soil, right? To put the reserves in China. In fact, they welcome the world to do that. Well, you and I are not going to go put our gold bars in China likely, but it does beg the question: why are they doing this, and why are they offering this, and who's going to take them up on this offer? And it's if you think about it, all the smaller nations in Africa, for instance, the Chinese are there in a big way, right? They're building the airports, the ports, they're lending the money. They all have reserves. They're all increasing their gold reserves. And now the Chinese government may say, well, why don't you put your gold reserves in our vaults? And I think that trend is going to happen, right? They may not have a whole lot of choice. They may be, you want your airport built? Why don't you put your gold reserves on the Chinese soil? So these are major, major, major changes in the world we live in, and I think this trend is not going to stop. So following the daily activity of gold, I think you just have to realize that the governments they're not day trading this stuff. This is strategic, and it's I would say largely permanent. What's permanent anyway? Take a 30, 40-year time horizon. They would like to have most of the gold on their soil. So I think this trend is going to continue. I think gold is cheap. I think silver. Somebody expressed to me the other day that silver is the cheapest asset on earth, which is an interesting thing to think about because it costs so much to find it. And then we all know it costs about $25 to get out of the ground, right? All the miners have to $20 to $25 somewhere in there. And so you can go buy it for $45. Well, you're not really paying that much of a premium to what it costs to get, right? So I think we need to be cognizant that this trend is going to go on for a while, and that it's quite exciting. We could see a spike. I think we're going to go in silver. We went right through the 40s, right? The breakout point was $33, which was around the time of the World Outlook Conference, and it broke through 33. And how quickly did it get to 47? My goodness, it happened in months. Yeah. So we're basically going through the 40s in a few months. I think once it goes through 50, I think we're on our way to $80. And and there's not much physical around, and so you guys are on top of this. I know. I'm just reiterating that we're getting more and more convinced. And then when it gets to energy, I know you've got all these energy experts that understand the market much better than us. You know what we've decided to do? We said, let's find energy companies that give us a yield of more than 8%.
Wow.
How about
Hmm.
9%? How about 10%? And guess what? There are a whole bunch of them. so, so that's what we've done. Because I'm not sure where I was going one day to the next. But if some company like Cardinal Energy, I think the yield's now fallen just below 10%. But basically, they're paying you 9% to own their stock. In play was that your so
Yes.
we're
Yeah.
find yield. We're looking. Everybody's looking for yield. We're going to find yield in the energy space because it's there and it's there for the taking. These are great companies. So and they have low cash flow multiples, but that's another thing. I mean, just imagine why would you want to own a bond in Canada that pays you 3%? 5-year bond pays you 3 or 4% when you can own Cardinal Energy, that's a growth company that pays you 9, right?
Yeah.
So that's what we've done. Once again, value. It's out there.
This is great stuff as usual, Paul. And I'm already whetting my appetite for seeing you out here in February because you've had a great track record here, telling our audience what to do, but you've just given us a great flavor of it. And we appreciate you finding time.
Mike, always great to chat. Thanks for having me on the show.